What is good, my people? It's your boy Daniel Fix here. Welcome back to the channel. Today I just want to do a quick technical breakdown of this NAS 100 trade that I took, a lovely NASDAQ long. You can see that I literally just about missed being SL'd in this position by literally half a pip. Like, I don't think I've actually been this close to taking an SL and not been SL'd and then have price reverse and hit full TP. So honestly, immaculate spread. This was taken on a 100k live funded account with Equity Edge. It's the first trade I've taken on a live funded account with these guys. So it's nice to see that the trading conditions weren't just in the phase one, phase two. I know a lot of prop firms do that. So happy days. Price ended up reversing, went the whole way up and just about touched my TP before reversing and coming back down. So this is literally like a perfect position in terms of almost SL and just about TP. And I came out of this position with a total profit of around $3.1 thousand. I was risking just above 1% because I slightly miscalculated my lots. I'll be honest, it happens. And my SL just needed to be a little bit wider than I anticipated it. So I'm going to give you guys a full breakdown in terms of why I took this trade, why my SL was right here, why my TP was here, etc., and give you guys some insights and all of that. Just before I do that, I'm going to go ahead and take my NeuroShroom, my supplements. I've actually had a lot of questions about this, weirdly enough. I didn't think you guys were interested in what supplements and stuff I'm taking, but this is it. If you guys can see, I don't know if the camera's too well. But this is a brand. I haven't really heard a lot of traders speak about this, so it might be a little bit of hidden game. If you do actually want like a full video on this and what it is and why I take it, let me know in the comments and I'll make a video on that. I think it's actually sold out at the moment, so I don't think you can buy it. And I am needing a reload, so I'm waiting for these guys to restock, but I'll make a follow-up video if you guys are interested. Well, let me eat that, and then we'll zoom out to the daily time frame. Cool. So this trade was taken on a Tuesday. Now, if you know anything about me or been following my trading strategy for a while, you know that I always look for two things on a higher time frame. I look for market structure and market sentiment, and I'm only looking to trade when those two things are in line with each other and they're in the same direction. Then I usually look for a trend continuation, like movement on a lower time frame, a break and retest, and I trade in that direction. Now, if you're paying attention right here, you can already see that price action, technically speaking, based off of the past 2 weeks of price action, was looking a little bit bearish. Technically, we are in an uptrend, but bear in mind for my strategy, we're only looking at 2 weeks of price action. So a lot of people make the mistake on the daily time frame. They zoom out too much. They're looking at overall structure. If you're trading the indices on a smaller time frame, all of this structure is completely irrelevant to you because chances are your stop loss is very small or relative to higher time frame price action, which means that none of this really means anything because by the time any of this has any sort of relevance, you're already in or out of your position. So you only really want to look at current price action. And for me, that's the past 2 weeks. So looking back at the past like 14 candles, technically speaking, we are still in an uptrend here because price failed to break the previous low. Again, just using some relative context, we failed to break the low right here. We then had this impulsive move to the upside. And even though we did wick and reject and kind of had this little consolidation period, technically speaking, this body right here closes above the two previous bodies right here. So that would actually be a higher high creation, meaning this is just a temporary retracement or an anticipated retracement. So market structure is technically still bullish, but if we go to market sentiment, which is the next step in a trading plan, looking at the past 3 days of price action and looking at current behavior, the market sentiment, according to these three candles, would be bearish. So if you know me and you know my trading plan, you know that's the first two steps. You might be asking yourself, okay, why did he take the long? And I totally understand that. You need to understand there's a certain element of your trading that's always going to be discretionary. So there's always going to be the certain positions where, like according to the trading plan, technically speaking, if you're following your technicals to the T, your trade setup is not there, but you can see your trade setup and you just understand. And especially when you've been trading as long as I have, coming up on 6 years, I just really understand the price action and I really understand the way the market moves. And you can just see your trading plan clearly. I can almost guarantee you, if you trade the same trading strategy for more than a 2-year duration, for longer than 2 years, you're going to get to a point where you're not even thinking about your technical analysis. You're not even consciously like looking at this, that, the other. You'll just come onto a chart. You'll see a certain price action formation. You'll see a certain pattern, not like a head and shoulders. I'm not talking about that sort of stuff, but you'll just see your trading plan and you just identify it by the way the price action is moving. It's really hard to articulate because it's all like subconscious and you can't really consciously explain your subconscious mind. But that's essentially what this was right here. So even though according to a higher time frame, I shouldn't have been trading, because I just know my trading plan and I created my trading plan and I've been trading it for years, I knew that this was just one of those movements that was going to have an early anticipation, an early retracement rather, and it was actually going to give me that set movement. Sorry, excuse the stutter, and then I just heard something at my front door and it kind of threw me off for a second. But cool. So the daily time frame was looking a little bit mixed. The higher time frame, so overall market structure was bullish, but market sentiment was in the process of being a little bit bearish. Taking into account, it was a Tuesday right here. Now, Tuesday has its own unique set of characteristics. It has different behavior to Monday, Wednesday, Thursday, Friday. If you want a full video on that and weekly characteristics, let me know in the comments. I'll make a video on that. But I know that Tuesday has a certain type of behavior. And based off of the Monday indecision, I felt like Tuesday was potentially coming down just to retest a little bit of structure before having like a little retracement or a little wick. I didn't think the candle was going to shut as a very strong bearish candle. And at the time, obviously, the price wasn't wicking. At the time, the candle was a strong bearish down here. So what I done is I went ahead and scaled into a 4-hour time frame. I don't typically use this time frame, but sometimes when the daily is not super clear and it's not showing me the information I need, I'll go to the 4-hour. Now on the 4-hour, what we can see is there was a key level right here based off a previous 4-hour structure. Before we had this huge impulsive candle, price was stalling around here. If we now look right, where did we come and tap back into? Where did we come and just start retracing, start projecting? It was at that same little point of structure. So I was like, fuck's sake, I'm not cutting out. I was like, okay, cool. Price is tapping in right here. Something's happening. Let me pay a little bit more attention. This was throughout London session, coming up into New York session. So I then scaled into an hourly time frame and looked a little bit further. Now, on an hourly, what we've done is we had a little temporary retracement. This is essentially hourly depletion. We come back up and we create a point of structure. If you don't know what I mean, just to kind of map it out for you, we have this huge bearish displacement down here. Price then has a little retracement and this little bearish candle right here, followed by this very small indecision, if you can see that, is technically a point of structure. So it's technically like we left a high, a low, and now we're coming up to leave a secondary point of structure or an anticipated higher high. So again, just pure price action right here. Now this is all happening around like just kind of into New York session. I typically like to trade from 1 to maybe 4 o'clock, but in this sort of instance, we were still having that deep push to the downside, and I wasn't really looking to trade sales for the day, so I ignored this. I can't speak today, man, but I'm leaving this in. I ignored the shorting opportunities, and I was just looking for my buy because I knew higher time frame wise, the market wanted to head higher, or I thought it did anyway. So cool. I ignored the actual trade throughout New York because price was actually still creating a key level. And then around 6 o'clock, which is typically very late for me, I actually don't trade at 6 usually, but I just saw it happening. At 6 o'clock, we form a key level and then we start to create some sort of zone. Let's get in further to a 15-minute. And what I see on a 15-minute is a very familiar trading pattern. If you've been following me or you've been on any sort of live session or you were in the Learn and Earn or any of that, you will hear me rant about this trade setup so often because it occurs so many times on the indices. US 30 loves it, NASDAQ loves it, German 30 loves it, gold loves it as well. And it's a setup that I call the 3-pin drive or the 3-pin breakout. Now, essentially, the 3-pin breakout is just a different variation off of a standard break and retest. There's a lot of different ways I can describe it. I can sit here and overcomplicate it for you and use fancy words and be like price leaves the displacement and then it fills it in with a corrective and it creates equal low liquidity and takes liquidity and yada yada. Or I can just explain it in terms of what happens is price creates a key level, which is right here, that we identified on an hourly time frame. We then have a large bullish impulsive that breaks the key level, like we do right here, the large bullish impulsive. We then have a period where price consolidates or corrects itself, and it comes and retests the key level. Typically, as this happens, price will create some sort of equal low, and then it will take the low. So it will like create one final point to get some people to get some buys, and then it will usually take the buy orders. It will fake out like a shorting and then break out to the upside. It's super, super common. It happens all the time. Again, I can do a full video on it if you guys are interested. But that's essentially what I spotted happening right here. Now, I know that usually the 3-pin breakout has one of two formations. We either form an equal low like we do right here. So we form like two candles right next to each other and then just take it with one singular wick like we did in this instance. Or we actually form two extended wicks that form an equal low. Not quite sure how well I articulated that, but I can show you some more examples on a future video. But it's sort of one or the other. Now, one of the setups doesn't require your stop loss to be as wide. One of the setups, typically speaking, price will start breaking out before it has a deep retracement. The other setup, you're likely to get the lowest low taken before price has its Daniel mate pattern up before price has its extension. That's the one. This video is turning into a shambles. I low-key want to re-record it, but I'm not doing it. So you might be asking yourself, okay, cool. How did you know which is which? How do you know when to put your SL tighter? How do you know when to extend it? Yada, yada. You actually don't. It's entirely dependent on the context. It's just dependent on what price wants to do for the day. Generally speaking, I'll always go for the wider SL, because why would you want to be SL'd on a trade and then have it go in your direction? Because it's just irritating to happen. So I scaled in on a 5-minute time frame. And what I saw happening is after we had this impulsive break to the upside and price comes back into the key level, we then have this consolidation. We have this little accumulation period, and price then creates. And right here, to me, it seemed like we had a little change of character. It seems like we'd broken structure right here, because we kind of stalled out at the same level. We leave like two relatively equal bodies, and then we have a slightly stronger sentiment bullish candle that closed back above. So to me, I was like, cool, that's the breakout move. This trend line is just kind of here for visual purposes, in case you're wondering. I was like, cool, we're now going to have this big extension move. It turned out that we actually hadn't finished taking liquidity yet. We hadn't finished taking out these wicks to the downside. So we ended up rejecting, and price came the whole way down. Now, why was my SL here? Why was it not right on the wick? Why was it not like here, etc., etc.? The reason my SL was where it was at is because I always put my SL below relative structure. So the lowest low of the movement that I'm trading is where my stop loss will be at. In this context, the lowest low of the movement I was trading would have been this wick. So I have a rule, because I've learned my lesson after years of trading, is that if I'm going to put my stop loss at the wick, I'm going to give it an extra 2-3 pips just for the sake of giving it 2-3 pips, because the market likes to move. The market likes to play these funny games. The market has a sense of humor. And one thing I cannot stand is having my stop loss taken to the pip and then having price go in my direction. So I always give it an extra 1-2 pips. Even if it doesn't need it, I'll just give it there, just for peace of mind. And that's exactly what I've done in this context, because my stop loss could have been at the wick, but I gave it an additional like 1 or 2 pips just to give it some breathing room. And clearly those 1 or 2 pips really helped out, and it saved me from getting SL'd in this position. Also, plus the spread. I know a lot of prop firms that I probably would have been SL'd in the trade when price was like up here, but the spread on Equity Edge was just very, very nice. So I can't complain. We came down, we just about took this low. So we just about took this wick, which I define as kind of like a liquidity grab. It depends how you want to look at it. And then what do? Well, we create and we break structure. We have that big 5-minute change of character that I initially thought we had right here. And price has that big extension to the upside pretty late into New York session. Now, you might be asking, why is your TP where it's at? Why did you take profit right here? Well, initially speaking, I was potentially looking at targeting a little bit higher up. I was potentially looking at the low of this little retracement as my overall take profit. But I usually target a 1-to-2 risk reward ratio anyway. And at this point, price was already up 2.5R. So I was already above my actual take profit level. I then also saw on a 5-minute time frame that we had begun to lose volume. The candles got smaller, prices kind of shifting sideways, and it no longer looked like we had that same amount of volume that we previously had. So I was like, you know what? I'm just not going to get greedy. It's a first trade on a new account, 3K profit. I'm closing it. I'm going to wait for my payout. And that was that. But yeah, that's pretty much it for the video. I feel like I've waffled a lot. I feel like I've started even harder. But yeah, nice one, boys. I'll catch you guys in the next video. See you guys in the comments. Hopefully you learned something too.